give you the markets update now. The local exchange, together with the Rand, will be hoping to win back some lost gains in today's trade. The JSE All Share index closing virtually unchanged, holding its close to its lowest level in nearly 4 months. In the meantime, traders continue to assess the outlook for the Fed's policy rate. Well, let's speak now to Bianca, Executive Director at Citadel, joining us from Pretoria this morning. Bianca, good morning to you. Let's start with the Rand, which has been on a roller coaster this week. Talk us through factors influencing trade there.
Good morning to you and your viewers at home. There's been severe volatility across global markets, and I think it's quite important that we understand that this is not just the case for the Rand. The volatility over the past week has largely been driven by uncertainty in the global banking sector, with investors really trying to figure out what comes next in terms of monetary policy, but also trying to protect themselves against further fallout, or a word that you've probably become accustomed to this week, contagion risk. So really just zooming in on what can we expect going forward, what will the Fed's rates approach be with the failure of 2 banks in the US. And markets are really just trying to digest all of this information and make sure that they can shield themselves efficiently.
Yeah, let's talk commodities. Oil prices rebounding by about 1% today after a meeting between Saudi Arabia and Russia. It helped to calm the markets somewhat. Talk us through those developments and what it means for our fuel prices.
We saw oil prices tumble to the lowest level since December 2021 earlier this week, before actually rebounding by 1%, as you mentioned. That rebound is largely driven due to production cuts that in effect dampen supply. Once supply goes down, price of oil actually stabilizes or actually increases. Lower oil prices will result in lower fuel prices for South Africa, subject to the Rand remaining stable. If we see a weakening in the Rand weakening will actually offset lower oil prices. And if we see a continuous increase in the oil price coupled with the weakening Rand, you can actually assume that fuel prices in South Africa will also rise.
Yeah, let's talk global fears now about the stability of the banking sector, particularly in the United States and Europe. That persists, it seems. What does this mean for emerging markets like South Africa?
These fears tend to cause large-scale uncertainty and fears of a potential banking crisis resulting in risk-off behavior by investors. When risk appetite starts to diminish, emerging markets, which are known for riskier investment destinations, come under pressure as investors sell emerging market assets and flock to what is deemed safe haven assets. Safe haven assets, as you would be quite familiar with at this stage already coming into this year, assets such as the dollar, the Japanese yen, gold, and ultimately this puts pressure on emerging market assets value, resulting in a weakening of the price, such as what we've seen in the Rand, for instance.
Yeah, let's conclude the conversation with these questions that seem to be abound, Bianca. It's all got to do with how much oil or fuel does South Africa have in reserves at the moment, considering how much the country consumes in a day. Do we have reasons to be concerned?
So when we look at the bigger picture, Africa is actually home to some of the world's largest oil and gas reserves. Africa as a whole boasts about 125 billion barrels of crude oil. However, South Africa doesn't have a strategic reserves policy for liquid fuels in place. And I think that is really where the uncertainty and the fear comes from. We rely heavily on imports to meet demand. While there is currently no direct threat of shortages, the lack of strategic reserves coupled with a potential breakdown in supply chain, so let's assume Transnet, harbour issues, that could very easily result in a shortage of fuel in South Africa, but currently, as it stands, no direct threat at the moment.
Bianca, thank you very much for that markets update.